Hi, I'm Samyukta from ithought's financial planning team, and I'm going to be answering a few important questions about life insurance. So here goes. The first question is, what are the objectives of life insurance? The main reason we want to insure our lives is because we are earning members in our families, and through that we create a certain level of financial dependence with each other. And the idea of having life insurance is that you're able to protect each other. Question 2, why is life insurance important? Life insurance is important because as I mentioned earlier, you're trying to insure your family against the financial loss associated with your ability to earn money. So this means that if you don't have enough life insurance, your family may not be able to retire at the time that they wanted to. If you have children, it could mean that they don't go to the colleges or the universities that you've dreamed of sending them to, or that you leave behind a big home loan for them to repay. So when you have enough insurance, you're making sure that all of these things are provided for and that your family lives a very comfortable life and are not affected financially by your loss. And this is really important because it's already going to be a very emotionally turbulent period for the people that you love the most. Question number 3. How much life insurance do I need in India? The amount of life insurance that you need depends on your income. That's the first and most important factor. But it also depends on other factors like what kind of lifestyle you lead, how much you owe, or what loans you have, and even things like what your aspirations are. So what have you promised to provide for your family? Have you promised to send your children abroad to study? Have you promised that you'll buy a separate house for retirement? What are the things that you wanted to do with your money? So considering all of these factors, you can arrive at what is the amount that you should be insured for. But typically, to give you an idea, you would need something in the tune of a few crores, and a few lakhs or 25-50 lakhs is not going to be enough for your family. Who doesn't need life insurance? There are broadly 3 categories of people who don't need life insurance. The first is senior citizens. Now, seniors don't need life insurance because they already have a retirement corpus through which they will be getting an income. And at that point in your life, most probably your children are not dependent on you financially, and it's only going to be your partner or spouse. And you've planned your retirement in such a way that that corpus provides for the other person as well. If you're a minor, you don't have a source of income that you need to insure. That's the most important thing. And in most cases, the minor is dependent on the parent, right? So it's the parent that actually needs to be insured. So if you're a parent, don't buy a policy in your child's name. Buy a policy in your name that insures your life to protect them. The third category of people who don't need life insurance are basically homemakers. Now, a homemaker contributes a lot to the family's well-being, but if she is not drawing an income, then it's very possible that the insurance company doesn't treat her as eligible for life insurance. But if you're a home entrepreneur, then you can actually show those income statements and you can get yourself a life insurance policy as well. Are life insurance policies good investments? Life insurance policies aren't great investments because they're basically designed to protect you from the loss of a loved one. And we've actually done a very extensive episode podcast on why life insurance products are not good investments. So the reasons range from the fact that you get returns over a very long period of time, say 10-20 years, and the time value of money erodes, or that you might get your insurance proceeds at the end of your life, so inflation kind of eats into those returns, or you may have cases where the investments are actually doing really well, but you pay a very high fee, so net you're not really making a great return. But if you'd like to have a more detailed answer, please do listen to our podcast, and I'm sure you'll find your answer there. Can life insurance premiums be tax deductible? So as of now, under section 80C, you can claim a deduction from your life insurance policy up to the tune of 1.5 lakhs. That is if you're filing your taxes in the old tax regime, but there is a new regime where deductions are not applicable. So even if you have a life insurance policy, you may not be able to claim it as a tax deduction. Eventually, the union government plans to phase everyone out of the old regime into the new regime. So it's possible that in the future, you wouldn't have a tax benefit from an insurance policy. Can life insurance be taxed? The proceeds from a life insurance policy that are received upon the death of the policy holder, these are exempt completely from tax. But if you have, say, a unit linked insurance plan, then the current budget, that is the one that happened in February 2021, that has a proposal that wants to bring in the maturity proceeds of ULIPs in line with the taxation of mutual funds. So you may end up paying tax on these in case your premium is above 2.5 lakhs per year. I hope this answers a lot of your questions about insurance. And if you're still not sure, or if something's on your mind and you want to know more, do send us a message with your questions. We'd be most happy to answer them. You can also get in touch if you'd like to explore what kind of insurance products suit you, or if you want your insurance portfolio reviewed. You can email us at info@ithought.co.in, or you can leave a comment and our team will get back to you. Thank you for watching.